Okay, good afternoon, everyone. Thank you very much for joining me. My name is Huzefa Hamid, and I'm going to walk you through the daily Forex market analysis. Before we get into the actual content, standard risk disclaimer. You've seen dozens of these before. Essentially, it's saying that keep in mind this webinar is for educational purposes only, and trading leverage products carries risk. Okay, so a little bit about me. As I mentioned, my name is Huzefa Hamid. I'm one of the senior analysts with Daily Forex, and I'm a Forex and futures trader. I'm predominantly a Forex trader, and within that category, it's mainly the majors, so everything against the USD, and they're kind of the big pairs: Euro, dollar, pound, dollar, USD, Swiss, the usual suspects. And I trade a couple of futures contracts as well. So I trade the S&P 500, for example, the futures contract there, the Russell, which is another US equity index futures contract, and even occasionally natural gas and crude oil. But the majority of my trading is around Forex. The most important thing I can tell you about myself is that I use technical analysis for my decision making. Now, that term means different things to different people. So I'll just define what it means to me. Essentially, the majority of my trading, in fact, not even the majority, all of it is around the price chart. I don't use any indicators. I draw my own support and resistance lines. I occasionally will put up a Fibonacci level, and that's the 50%, which is, well, it's not a true fib level, but the 50% level and the 61.8% level. But beyond that, I don't use anything else, such as moving averages. I'm investigating volume a bit, but at the moment it's very kind of trend, support and resistance, and you're going to see that reflected in my charts. I'm based in Toronto, Canada. At the end of the presentation, I'm going to give you my email address, certainly. So if you're in the neighborhood, if you're in Ontario, Canada, or in the Greater Toronto area, feel free to give me a shout. It'd be great to hear from you. Or in fact, if you're from anywhere else in the world. We're going to talk a little bit about the economic calendar initially, and then we're going to get into some charts. I'm not going to go through the week's economic calendar in this particular market update, but if you're looking for a good economic calendar, one of the go-to places is Forex Factory. Here's how I set up my filters on Forex Factory. You can see at the top, I look at high impact and medium impact news announcements. I uncheck the box for low impact news announcements. And I'm not using these news announcements to figure out currency trends or Forex trends. So for example, I'm not looking at GDP or central bank announcements trying to figure out, okay, these are the inflation numbers. Where do I think price will go based on that? It's really just to avoid entering a new trade right before on the cusp of an announcement. It's just to plan my trades in terms of timing, but not actually in trying to interpret economic data. I always check off all the currencies. Aside from the CNY, which is the Chinese currency, the yuan, if I'm pronouncing it correctly, I uncheck that because I happen not to trade it. And if you're looking for some news, go to markets.com and just click on the news tab there. As if you want a bit of context in terms of why certain things might be moving the way they are. It's a good portal. It gives a good summarize, really the highlight level news. I don't use this for my own trading, but it's definitely there if that's something that interests you and if you feel it'll add some depth to your trading. In terms of time frames, I do the majority of my analysis on the higher time frames. So you've got the weekly, the daily, and the 4 hour. And then when I go further down into the lower time frames, I draw an imaginary line from the 4 hour down. So from hour, 15 minute, 5 minute, I consider those to be like shorter time frames. So the higher time frames where I do my analysis, I try to figure out the trend, direction, and the lower time frames is often where I will execute the trade. So as an example, majority of the time actually 4 hour is really where I'm interested in. I look at the daily and weekly, particularly if we're at some key levels, and then I'll execute most commonly on the 15 minute. So let's begin by looking at the euro, and all of these pairs that you're going to see are against the USD. So you can just assume that's going to be the euro USD. And actually, before we get into the chart, I want to point out the last time I did this particular type of a presentation, the market outlook, was on April the 20th. So it's now May the 11th. I'm going to go back and refer to what I predicted at the time at April 20th, see how that's panned out, see how it kind of relates to the current levels. So you get some context. There's a bunch of people who watch me now again and again. So they can see how I'm kind of trending or tracking with my analysis. So this is the Euro USD. It's been trending up, and then it got into a sideways kind of a pattern. And the key level that I'd identified is the 1957, essentially 1.19573, if you want to be pretty precise. You see it marked on the chart there for a couple of reasons. Really, when it started to get sideways, that's where it saw resistance around there, but it started to make a bit of a reversal pattern where the green arrow is. It really reversed hard at that level. So that's where I marked the level. And I noticed before and after it had been an area of rejection, certainly as a resistance. So that line became what I now term, and I've used this from another trader, Chris Capre, I term it now the point POC, or point of control. So I'm really looking to see, was Euro above or below that line, to really try to figure out if I should be bullish or bearish. And at that time it was above, and it's continued to trend above. So this is now getting into the 4-hour chart. So this was a daily. Now we're getting into the 4-hour chart. You can see in the 4-hour chart towards the end, you can see that big bullish candle there. It's really pushed hard against that. So that turned out to be a really important level for whatever reason. But now a secondary level has come into play, and that's the 1990, really, 1989.9. And you can see on the left of the chart, so we're talking around mid-April, that had been a rejection area to made a couple of, essentially a double top. Made a double resistance area, and then it came back. When it broke through that area, it stalled initially in late April, where they marked the gray box, stalled at the level again, and then broke through it decisively, and then tested it again as a support level. So you can see how it's that level comes into play. Now there's been a process called role reversal, where resistance turns into support and vice versa. Now, back in April 20th, this is what I wrote in the summary email after the webinar. Euro USD has been in a sideways pattern since August 2020. So for some time now, a key level in that pattern, 1957, 1.1957, was tested as resistance and support multiple times. We just saw that price is currently above the level after breaking through it decisively, and we're bullish Euro USD. So that's what I felt a few weeks ago. So that's April. The circle marks April the 20th when I gave that webinar. There's a line, there's that level. And it was above the 1957 level down below there, but that was a price at the time. And since then, that bullish area, I took a lot of sideways action, but it's been, it's a good, well over 100 pips above it now. But it went sideways for me for a while, and I'm still bullish. Now the level I'm looking at, I want the price to settle up above if I was going to enter a new trade and continue being bullish, is over the 21,500 level. That's Euro USD. Let's now look at pound dollar. So there was a key level that I identified. The pound had been in a nice uptrend, and the price began to squeeze into this triangle. Then it broke through, kind of confirming the uptrend, confirming my bullish bias. The key level I drew was 37.58, 59, and a secondary resistance then formed at 40.05, 1.4005. Now that's the daily chart moving. So this is what I wrote back in April. GBPUSD has been in a long-term uptrend since 2019, but in recent months has been moving sideways. We've identified 37.59 as a prior resistance, and price is now showing bullish action in the last few days and trading above that level. However, on the 4-hour chart, price has stalled at a short-term resistance of 40.05. We would like to see price settle above this level before being bullish. So that's what I wrote in April 20th. It's now May the 11th. So going to the 4-hour chart, you can see the 40.05 level where I said, okay, price is stalled at that level. So this is when I wrote that, the white circle, but I wanted to see price settle above that level. At the time of the webinar, price was at 39.36. So I wanted to see, good, 60, 70 pips, 70, 80 pips away from that 40.05 level. I wanted to see price breach that level and settle above it. So this is the 4-hour chart. So this just shows you the element of timing. Now, if I go into the 15-minute chart, it stalled for a couple of hours at 40.05, then pushed up above it. And then when I saw that bullish decisive candle above it, I just went long. Now, there might have been a premature. It could have just dipped back down and stopped me out. My stop was around here, just below 39,800, 39,70, somewhere like that. But I felt like I thought, with that such a bullish struck candle, there's a good chance I could also just miss the trade. It went sideways for a few hours, and then it's just been pushing up since. And I'm still bullish. There's a level that's now appearing around, this kind of support area. As long as it stays above that, that's what, 41.20, something like that. Yeah, 41.10, 41.20. I'm bullish GBPUSD. Dollar Swiss. So dollar Swiss had been trending down since the beginning of April. It broke through the previous support. So it's really reversed an uptrend, essentially. That, it'd been trending up since the beginning of 2021, peaked and broke the most recent support, confirming a new downtrend at 92.13. And just going into the 4-hour chart, so that was the daily. Going into the 4-hour chart, you can see how it then, when it broke that level, 92.13 or 92.134, it tested as a resistance and then pushed down quite heavily, and it's broken the most recent support at 90.80 or 9,800, depending on how many decimal points you use for your trading. Now, back in April 20th, I wrote dollar Swiss has been trending down since the beginning of April 2021 and broken through previous support at 92.13. It looks like it looks set to continue the downtrend. So that's exactly what happened. So back in April 20th, price was 91.62. I said, well, it's broken the support. It's going to continue going down. And that's exactly what it did. It went sideways for about a week or so, and this pushed down and essentially collapsed. And you want to really wait for these retraces. That was a great, really decent entry time because it was up against this area here. The previous resistance, support often turns to resistance. You want to see the same thing happen now if you want to continue entering into this downtrend here. So the price has really collapsed. And it's got a long way to go. So that was the white circles again, April 20th, when I first made the prediction of continuing the downtrend. It's continued going down. It's dipped below this area, this previous resistance, which I always assume the previous resistance will always potentially turn into support. So it's dipped below there nicely. So I think it's got a nice way to go down all the way to 88.71. And we're good. We're hundreds of pips away from there. So there is room to time a trade on the lower time frames and for it to push down. When you enter a trade based on a high time frame, but time in the lower time frames, your risk rewards become a lot better. New Zealand dollar, US dollar. Okay, so trending up. These are my two key levels I'd marked. One at 69.43, a later level, and then a support area had formed, earlier support area had formed at 71.04. You can see the three kind of areas that's marked near, and then it dipped back down below that support area, but stalled at 69.43 and then continued back up. Now, what I saw, excuse me, was a failed reversal pattern, failed head and shoulders. And so when a pattern fails, it is just as strong a signal in the opposite way. So this is a head and shoulders reversal. It was predicting a downtrend, but when it failed and went back up above it, then it's a very bullish sign. So there's a resistance I drew going down to the 4-hour chart, 72.69. So that's now the key level. If I want to be bullish, that's a key level I've got to watch out for. I really want the price to settle above that before kind of entering. So what I wrote, New Zealand USD recently tested a long-term resistance level at 69.43, except now it's tested as support over March and April. New Zealand US dollar is trading above a previous support made at 71.04. So that was our key level, and seen on the 4-hour chart, we're bullish New Zealand dollar US dollar. So I wrote that April the 20th. I wrote at the time of the white circle, we're bullish. Yeah, it went up, would have taken quite a bit of heat. It stopped. So I was long. I had my stop below this support, and I think it was around 70.80 or 70.90. I really thought I was going to get stopped out. Like, it just fell rapidly. It came up, went to that previous resistance, 72.69, fell really rapid. I was pretty sure I was going to get stopped out, but it has rebounded and it's now sitting above my entry. And I'm still bullish, but now if I was going to enter a new trade, I would want it to be above 72.69. Aussie dollar, US dollar, similar situation actually. Then New Zealand dollar, US dollar. Obviously, the Aussie dollar, New Zealand dollars are going to be somewhat correlated in an uptrend. Started to move sideways since December-ish, I guess, last year. At 70, really began the sideways moving around the 75.81 level. Similar situation where there's a head and shoulders forming. This time it didn't breach that neckline of the head and shoulders. It stayed, and now it's pushed up. For me, that's confirming a bullish sign. And there's a secondary resistance I've drawn now, and you just kind of zoom into the daily at 78.20. And now getting into the 4-hour, you can see that 78.20. It's breached. I took this screenshot last night, so there's a good 2, 3, 4-hour candles that have now appeared since. I haven't checked, but at that time, it's breached that triple top, and I'm hoping it's going to settle nicely above it. It will confirm my bullish bias. I wrote at the time, Aussie dollar, US dollar looks to have failed head and shoulders pattern with a neckline. It's around 75.81. We're bullish Aussie dollar. How did that turn out for me? That's when I wrote that. Yep, that's been the story of my last few weeks. Everything went sideways initially before it moved into my direction. So that's where I was longish. I had my stops below I think I had it around here. It's just quite a high stop because of these support areas hadn't formed yet. But again, I was in profit pretty quickly. Then it went back down to my entry, and now I'm nicely up. Depending if you're looking to enter a new trade, I'm still bullish. You want to be above that 78.20. CAD, dollar CAD. I've marked a very old level, 29.57, that launched a huge rally in January 2020. So dollar CAD just pushed up hard, probably off the back of COVID, and it's if you were to scroll back on the chart, you'll see that level. Now, since then, it's been trending down. It broke that support, tested it really cleanly as a resistance at 29.57, and then broke the most recent support at 23.65, and tested it for a brief level as a resistance. So it's been classic downtrend. Downtrend primarily defined as lower highs. And here we are, just zooming into the 4-hour. I'd marked that level 26.30, 26.29 back in late April, because I felt that there was a resistance there, was a nice entry position. How did that turn out for me? US dollar CAD, I wrote back in April, is in a downtrend, but it's a very volatile trend with hard to find entry points. It doesn't look that difficult now in hindsight, but that's how I felt about it at the time. I wrote that, and then I said it's in a downtrend essentially, 26.072. I was short then, so I actually went short. I put a limit order in 26.29 because of that resistance area. it pushed up hard. I remember intraday, and I thought I was going to get stopped out. I had it quite, and then it just collapsed, and then it's just been going my way. It's still in a, so it's earned me a few hundred pips. Now, I would, if you're entering dollar CAD new as a new trade, what do you do? So you want to look at the previous resistance areas, and you want to start getting entries closer to those resistance areas. That's what I typically do. Now, we're not there at the moment. The other thing about dollar CAD is it's sitting on a long-term support level from back in 2017, September 2017, it's sitting right on the cusp. So I would not enter this as a new trade personally. If you're going to enter as a new trade, I'd rather be short than long, because that's where the near-term trend is, and you really want to time it in the lower time frames, at least the 15 minutes. But I think it's not going to. I think I would personally wait for the next 1 or 2 weeks, see what those candles look like on the week. This is a weekly chart now. See how it responds to that long-term support level. Dollar CAD, and lastly, dollar yen. Dollar yen. So it had been pushing up since, it's been in a downtrend all the way up to the beginning of 2021, and then it just reversed. It's been pushing up nicely. And it looked like it was going to reverse for a bit. This area here, where beginning of April, you go back on the chart, there's plenty of resistance areas there. So it's really kind of hitting these resistance areas. But it seems to have held its own, and the key level I marked as 108.45. So this is probably one of the trades I think out of the 7 predictions, this is the one I got wrong. This is the 108.45. I got it. Well, I'll show you what I put at the time. It went my way initially, and then it reversed. So dollar yen has been trending down since the beginning of April 2021, and has broken through a previous support at 108.45 and subsequently tested as a resistance. The downtrend looks set to continue. So I wrote that at that point, that white circle. So it made this, this is the previous 108.45. It tested as a resistance where it used to be a support. 108.3, I wrote it when the price is 108.135. It went about 50, 60 pips my way at the time. I'd gotten a slightly better entry. I moved my stop in that scenario to break even, and I got stopped out at, I think, plus 10 pips. And then to my surprise, it came back up. I thought it was going to go for another move down, push down. And I was hoping, I shouldn't hope really, you want to see how the chart unfolds, but I was predicting that the price would hit this 108.45 level, the yellow line, and then scoot back down again. It didn't. In fact, it made a bullish push through in a 4-hour candle, so intraday, just like how it pushed back through below, it pushed back above. You look like that around that level, you can see one big long candle down, but back in end of April, and now a few days later, that's more mid-April. Now, a few days later, bang, right at the same level, you've got a big candle up. So it's been a real 180-degree turn in sentiment. So you really, on the fly, have got to change your view. You can't just sit there and go, well, I'm still bearish. Now I was like, okay, this is potentially a new bullish uptrend. It pushed up, came back down. The second gray box there, when it made this reversal pattern, at that line again, that confirmed that this is now a support level where it used to be resistance. I'm looking for levels to change roles. Once you've marked out a key level that the price has reacted before, it can be bullish or bearish, depending on which side is trading from and how it reacts. But when it reacted so cleanly against that level, I was then bullish. I took a long trade. It was gone my way, and then it's gone back down to my entry, now back my way. I'm a little bit up. So I got stopped out of break even when I was bearish, well, plus 10 pips, and now I'm a little bit up. I'm starting to feel dollar yen is more headache to chase. I've had to change my trade twice, break even on the first trade, and now it came back near my entry the first time. Well, here we are. I'm just a little bit above break even now again. All right, so that is dollar yen. Daily Forex has a bunch of signals you can follow. These I love giving these market analyses, but if you want some more structured signals, one of my teammates, Adam Lemon, fantastic analyst, just click on his Forex signals right there, and then you can get a free 30-day trial. I think that's still available. But check when you watch this webinar, watch the subsequent recording. Some final thoughts. Listen, if the chart isn't clear, just stay away from the chart. It's fine. Like there's some clarity right now on the charts. April 20th, some things didn't feel so clear. In the middle of that, between now and then, it was very rangy. So if the chart isn't clear, stay away. Either go to a different time frame, just wait it out, go to a different pair. Always mind your risk. So all of these, everything I'm saying, okay, I'm bullish or bearish here or there. That's great. To what degree you'll profit from is how you control your risk. Where's your stop loss? Get good targets, which are at least higher than your stop losses. You want positive risk reward ratios. If you feel like reaching out to me, Huzefa@dailyforex.com. I trade for myself, by myself. I'm always happy to meet other traders. Give me a shout, especially if you're in Ontario. Be great to meet other Canadian traders or kind of in my province. But if you're from anywhere in the world, be happy to hear from you. Take care. Have a fantastic rest of the week.